Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of Brent crude oil and spot gold.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these my charts. This was all my own original work, as I think you deserve to have that. So with that, ICE Brent crude oil futures. A bearish opening Black Morobozo yesterday after the previous session's indecisive doji cross. A number of interesting points to note. The first is the close yesterday back below the dark blue upper time, currently at 68.84, of the showrunner for this market since last summer, the many times broken and many times repaired dark blue April to July 2024 bearish shift pitchfork. This is still an influential pattern despite the breaks both higher and lower. Secondly, the moving averages. The gold long moving average above, currently at 71.36, which acts as resistance, and below the mauve medium moving average, currently 68.11, and the rising green short medium moving average, currently 68.11 also, which both act as supports. The former is actually a dubious support, whilst the latter, well, it seems to be better but tested. By the way, these two have not made a golden cross yesterday. Thirdly, we are within a big band of congestion, some of it dubious, but which stretches up from 68.33 up to 70.13, and then again at 70.67, followed by 71.29 to 72.29. This might go some way to explain the lack of follow through in recent attempts higher, and also to some degrees lower as well. There is one other item, and that one is not fully operational as yet, if at all. It is to look at the whole action June to date, including the peak over the $81 even dollars level, as a possible bearish halfway hesitation. It is not done yet, just a possibility, but one that becomes dimmer the more we spend within this three-layered congestion area. Now, so far today, a higher open back above the broken dark blue upper time, if only just, before a fresh move lower down towards the bottom of the 68.33 to 70.13 congestion band, which we pierced yesterday but did not manage to close below. Spot gold. A third bullish white soldier yesterday after the recent counter-to-the-counter bullish engulfing pattern, and the first close back up and over the broken, now possibly repaired dark blue lower time, currently 34.10, of the old early April to mid-May bullish shift pitchfork. The last few weeks have seen the creation of a new small uptrend, currently 33.29 to 34.10, formed over the last 3 weeks with a new uptrend in creation, and the old dark blue lower time acting as the upper trend line. This is the first real attempt and close outside of that pattern that we've seen. As I said before, it's not unusual to see markets trail along the underside of this brand new pattern, with a broken along the bottom of the broken pitchfork of the upper and lower times, such as we've seen here. And the risk that is we may push back up over this broken lower time, and that seems to be what's happened. Now, I still have on my daily charts target X at 35.30 and harder to reach target X1 up at 36.11, and that's for the April to mid-June reverse head and shoulders pattern, though the market has been very slow exploiting any attempts higher. I've also noted on my daily chart that the action since about mid-April does offer potential for a three peaks and domed house pattern and or a possible inverted cup with handle pattern. For the first pattern, there is still potential there, but we needed to start constructing a dome house pretty soon, and that doesn't look like it is happening, so this puts this pattern at risk. For the second pattern, the inverted cup pattern, it was created between mid-May to late June, and we are in the cup, the handle construction phase of this pattern. If this pattern was to play out, then we would need to start looking lower very soon, which also doesn't look like it's happening, and also puts this separate pattern at risk. Now, so far today, a small attempt higher, capped by the June highs at 34.46 and 34.51, though not strong enough to push prices back down below the dark blue lower tone. Well, not yet at least. It's looking like an indecisive doji cross right now.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.